Fine guys, so now we will revise chapter 4 which talks about the input tax credit and the computation of GST liability. The provisions with respect to input tax credit is covered in section 16 to 21 of CGST Act. First, what is input tax credit? Whatever tax is paid on the inward supply, whether it is input service or capital goods, it is called input tax, and if the recipient is eligible to claim the credit of it, it is called input tax credit. And whatever input tax credit is eligible to claim with respect to his inward supply will be credited to a ledger called electronic credit ledger. And even the tax paid under reverse charge mechanism by the recipient is also called input tax, which can be utilized against the payment of output tax. And output tax here means the tax which is payable against the outward supply. So to claim the input tax credit, there are various conditions and restrictions to be satisfied. Section 16 gives the eligibility and conditions for taking the input tax credit. What are those? One by one. The subsection 1 will tell the registered person can only claim the credit, and with respect to whatever inward supply he is taking, it has to be used in his business or intended to be used in his business. Then coming to subsection 2, it has various conditions. The recipient should be in the possession of the invoice which is issued by the supplier or any other document. The recipient should have actually received the goods or services. Even if it is received by the third party also, it is deemed to be received by the recipient. Then the supplier would have given the details of the supplies what he has made to the recipient in his GSTR1 or invoice furnishing facility. Then the credit will auto populate to the recipient in his GSTR2A or 2B. Then the supplier, whatever tax he has collected from the recipient, he has to make sure that he has deposited the same with the government. Only then the recipient can claim the credit. And the recipient can claim the input tax credit only by filing GSTR 3B on or before 20th of next month. So all these are the conditions given under subsection 2. If the goods are received by the recipient in installment or in lots, only when he receives the last installment, he can claim the input tax credit with respect to full purchase. Then if the recipient fails to pay the amount to the supplier within 180 days from the date of issue of invoice, and on which if recipient has already claimed the credit, then he has to reverse it along with the interest at 18%. Reverse in the sense he has to add it to his output tax liability and pay it. But there are certain exceptions for it where the reversal is not required. That is wherever RCM is applicable, where recipient himself has to pay the tax to the government or department. Then schedule 1 cases where there is no consideration but still it is considered as supply. Then additions made to the value of supply as per section 15 subsection 2 clause B, that is the supplier's liability paid by the recipient directly to the concerned person. Then coming to subsection 3, if on GST paid on the capital goods, if it is capitalized and added to the cost of the asset, and if depreciation is claimed on the GST component in income tax, then on the same there is no credit available under GST. Sir, what if GST component is not added to the cost on which no depreciation is claimed under income tax? In that case, credit can be claimed. Then coming to subsection 4, which talks about the time limit to avail the input tax credit, which is any invoice relating to any month of the particular financial year, the credit can be claimed maximum within 30th November of next financial year or actual date of filing the annual return, that is GSTR 9, whichever is earlier. Next, coming to section 17, which talks about apportionment of credit and blocked credit. Below is the list of situations where input tax credit will not be available. Subsection 1 will tell if a particular inward supply, whether it is input, capital goods, if it is partly used for business purpose and partly for personal purpose, then whatever is attributable to business purpose only can be claimed as credit. Then coming to if a same inward supply is used to provide taxable as well as exempt outward supply, whatever is used to provide the taxable outward supply, only to that extent credit can be claimed. And how to calculate how much is attributable to business purpose, how much is attributable to personal purpose, or how much is attributable to taxable outward supply, how much is attributable to taxable exempt outward supply, there is a rules which will help you to calculate that. Then subsection 3 is only relevant to subsection 2, where how to calculate the exempt turnover is given. Exempt turnover, whatever exempt supply is there, it will include that. That is whatever is actually exempt under section 11 of CGST Act or section 6 of IGST Act, or nil rated supply and not taxable supply. In addition to that, For subsection 2, they have some addition item also. Whenever the supplier is supplying something on which tax is payable by the recipient under reverse charge mechanism, for the supplier, it will be considered as exempt turnover. And if he is engaged in sale of securities, sale of land and constructed building, even the sale value would be considered as exempt turnover. This is only for subsection 2 purpose. Then coming to the banking and financial institution or insurance company, there is option NBFC. NBFC, two options have been given because one of their major outward supply is exempt. That is extending loans or advances on which in return interest or discount is charged. So for them, they have to calculate separately as per subsection 2 what is their taxable supply and exempt supply. Whatever is attributable to the taxable outward supply can only be claimed credit as per subsection 2. But an optional option is given for them as per subsection 4 where they are telling whatever is their input tax, they can straight away claim 50% of that as a credit. Remaining 50% will become lapse. In that case, straight away they can opt for 4. Whether the banking company or financial institution or NBFC, whatever they are opting for, either subsection 2 or subsection 4, they have to continue with the same thing throughout the year. They cannot switch between the schemes or subsections in between the year. But if there is any supply between one branch to another branch which is registered under the same PAN, then this 50% limit will not be applicable, guys. Next, coming to block credits, which is given in section 17 subsection 5. Here there are list of situations on your inward supply you cannot claim the credit. Blocked means input tax credit cannot be claimed if your inward supply is included in any of these points. What are those? One by one. First one, clause A, motor vehicle for the transportation of person having approved seating capacity of not more than 13, means less than or equal to 13%, including the driver. Okay. If it is used for that purpose, credit cannot be claimed, but except when they are used for making the following taxable supply. Means if you are purchasing the motor vehicle, but for the purpose of providing the taxable outward supply in any of this nature, then credit is available. What are those? Further supply of such motor vehicle or transportation of passengers, imparting training on driving such motor vehicle. See guys, whenever the credit is not available, here in this points, I have highlighted in red color. Whenever credit is available, I have highlighted in green color because there is a chances of getting confused. You may understand it vice versa. That is why I just indicated in the colors. Next, on the purchase of vessels and aircraft, if you have paid any tax, credit cannot be claimed. But if in the following cases, credit can be available. What are those? If you are purchasing it for the further supply of such vessels or aircraft or transportation of passengers, then imparting training both for vessel as well as aircraft, credit can be claimed. Then even if you are purchasing vessel and aircraft for the transportation of goods, credit will always be available. Then coming to, see, at the time of purchase of motor vehicle, vessels or aircraft, the GST whatever is paid on the purchase, if it is blocked, then in the future, if you take any services for that motor vehicle or vessel or aircraft in the nature of service, repair or insurance, even the GST paid on that service is also blocked. Sir, at the time of purchase, if I can claim the credit of the tax which I have paid on purchase, then even when you are taking any input service for this motor vehicle, vessel or aircraft, the credit can be claimed. Then they are also telling in the following cases credits are available. That is, if you are a manufacturer of motor vehicle, vessels or aircraft, any input service you take in the following nature, that is general insurance, servicing, repair and maintenance, whatever GST you have paid on it, you can claim the credit. Then if you are in the further supply of insurance, then whatever inward supply you are taken also, you can claim the credit provided you have paid GST on it. Then coming to the next item, the following inward supply of goods or services are both. Means if you have purchased any of this, you cannot claim the input tax credit of the GST paid on the same. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicle, vessels or aircraft, then life insurance and health insurance. But credit can be claimed provided you provide the same category of outward supply. For example, you are purchasing food on which you have paid GST and also you are engaged in selling the food. Only in that case, on purchase, whatever tax you have paid, you can claim the credit. Then coming to membership of club, health and fitness center or travel benefits extended by the employer to his employees. On that, whatever GST is paid, credit cannot be claimed. But if it is an obligation for the employer to provide the transportation facility or extended transportation services for any employer under any act, then in that case, credit can be claimed by the employer. Then coming to the clause C, work contract services which is of capital nature. when supplied for construction of immobile property, the credit cannot be claimed. But if that immobile property is plant and machinery, then credit can be claimed. Even if it is used as an input service to provide the same category of outward supply, credit can be claimed. Then if there is any goods or service or both, which is of capital nature, which is received or purchased for the purpose of construction of an immobile property, credit is blocked. But if it is for plant and machinery, credit is available, provided it is on his own account for the purchaser. Then goods or services are both on which tax has been paid under section 10, that is composition scheme. Even the person who has paid also cannot claim credit. Then if by chance composition supplier has collected any tax from the recipient which he is not supposed to, but still if he has collected, then the recipient cannot claim the credit. Then goods or services are both received by a non-resident taxable person. So if non-resident taxable person has paid any tax on his purchases, he cannot claim credit. But if he has imported any goods into India on which he has paid IGST, he can claim credit. Then if the goods or services are both used for personal purpose or personal consumption, credit cannot be claimed for the same, because one of the condition is it should be used for business purpose. Then if the goods are lost, stolen, destroyed, written off or disposed of by way of gift or free samples, then on the outward supply, the person will not be paying any tax. So in the same case, for the same goods, if you have paid any tax on the inward supply, you cannot claim the credit. But if the goods are distributed as free samples, which is covered under any of the para given in schedule 1, which will be outward supply, where the value of supply will be determined as per the valuation rules. In that case, as the supplier will be paying tax on his outward supply, on his inward supply, he can still claim the credit. Then if any tax is paid under section 74, 129 or 130, which we call it as recovery section, credit cannot be claimed for the same, guys. Then coming to section 18, availability of input tax credit in some special cases. 18 subsection 1 covers 4 special cases. What are those? One by one. Whenever a person is liable for registration under GST, he has to apply for registration within 30 days from the date he is liable for registration. Once he applies for the registration, his effective date of registration will be the date on which he was liable for registration. So preceding that day, whatever inputs he is having in the form of raw material, WAP and finished goods, whether it is stock or inventory, he can claim the input tax credit on the same. Next, coming to person who obtains the voluntary registration, on whatever date the registration is granted to him, that is the effective date of registration. Preceding that day, whatever inventory is having of raw material, WAP and finished goods, he can claim the input tax credit of the same. But for both the cases, the credit should be claimed within 1 year from the date of issue of invoice. Means the goods cannot be more than 1 year old. Then coming to the third case here, the person was under composition scheme. For some reason now he is switching to section 9, that is normal scheme. So on the date he is switching to normal scheme from composition scheme. On the preceding day, whatever stock he is having of raw material, WAP, finished goods as well as capital goods, he can claim the credit on the same. Then coming to the last case, my outward supply was exempt, but from tomorrow it becomes taxable. So as on today, whatever stock of raw material, WAP and finished goods as well as capital goods I am having, I can claim the credit. Whereas for capital goods, from the date of purchase, that is from the date of issue of invoice till that date of what particular date I am eligible to claim credit, we have to reduce 5% for each quarter or part of the quarter from the GST amount paid on capital goods. Even in this third and fourth case also, the input tax credit has to be availed within 1 year from the date of issue of invoice. If the goods are already older than 1 year, then you cannot claim the credit. Then coming to subsection 3, which tells subsection 2 is nothing but within 1 year's criteria. Then coming to subsection 3, if there is any succession of business, if the business has been sold, merged, amalgamated with some other business, then whatever credit was available for the predecessor or a transferor can be availed by the successor or transferee. Then coming to 4, which covers the reverse scenario of whatever we have learnt here. It will cover the reverse scenario. Sir, I was under 9, now I am going to 10. That is, I was under normal scheme, now I am going to 10. Or my outward supply was taxable, but now it is becoming exempt. In that case, on the date immediately preceding that day, whatever stock I am having of raw material, WAP and finished goods as well as capital goods, if I have already availed credit on it, then we have to reverse it and add it to the output tax liability, because from tomorrow I will not be eligible to claim any input tax credit. This stock I had purchased before that day, I have already utilized the credit, but when I will be using it, only when I am going to section 10 or when my outward supply is exempt. So that is why we have to reverse and add whatever input tax credit we already claimed to the output tax liability. With respect to capital goods, same story. From the date of issue of invoice till that day, for each quarter 5% or part of the quarter 5% has to be reduced, guys. Then on any stock, if you are not yet utilized the credit, then that credit will become lapse. Then coming to subsection 6, if you have purchased any capital goods including plant and machinery on which input tax credit is claimed under GST, now if the same capital goods or plant and machinery is sold, then on that what is the GST to be paid is whatever credit you have claimed already, reduce it by 5% for each quarter or part of the quarter till the date of sale. Then take actual GST amount on the value of transaction, whichever is higher has to be paid. But with respect to certain goods like refractory bricks, molds, jigs and fixtures, if it is supplied as a scrap, straight away whatever is the tax on the transaction value, the supplier has to pay tax on that. No comparison with ITC. Then coming to section 19, which talks about goods sent to a job worker. Job work is a treatment or process done by a job worker for someone else's goods. So he is not buying any goods, he is not selling any goods. He is just performing certain process or treatment for someone else's goods. That someone else is called principal. So principal can buy the goods and send it to the job worker, on which he can claim the input tax credit, or else he can ask the supplier to directly deliver it to the job worker, on which again the principal can claim the input tax credit. So at the time when the goods are sent by principal or directly from the supplier's place to job worker, it will not be considered as supply. But if the goods are not taken back within 1 year, in case of normal goods, which can be extended for another 1 year, and in case of capital goods within 3 years, which can be further extended for another 2 years, if the goods are not taken back within this time, actually the principal will have two options: either to take back the goods or to directly supply the goods from the agents or job worker place. If none of this happens within 1 year or 3 years, in case of the normal goods and capital goods, then it is considered to be a deemed supply between the principal and agent or job worker, and principal will end up paying tax including interest. And when actually agent give back the goods after the certain time, that is after 1 year or 3 years, then even for him it will be considered as supply, guys. So this is all about when the goods are sent to the job worker, how to claim the credit. Can principal claim the credit? Yes. But if it is not taken back within certain time, then it will be considered as deemed supply between the principal and agent. Then coming to manner of distribution of credit by the input service distributor. So if with respect to any input service which is taken by an entity, but if it is used by various recipients registered separately under GST but under same PAN, in that case one particular registration entity has to take a responsibility to distribute the credit to various recipients who has used that service, provided a single invoice is issued. So whoever is taking that responsibility to distribute the credit to various recipients who has actually enjoyed the service is called input service distributor. So input service distributor will distribute whatever is the total credit to various recipients based on previous year turnover. If previous year turnover is not available for all the recipients, then they will take previous quarter turnover, guys. Then if by chance, if excess credit is distributed to any recipients, then it is responsibility of input service distributor to recover that. That is what is mentioned in section 21. Then coming to utilization of input tax credit, once the recipient has crossed all the conditions, restrictions, everything, and finally is eligible to avail or utilize input tax credit, how should he use the input tax credit is given in section 49, read with various rules, which I have given in this table. So whenever I am eligible for any input tax credit, that amount will go and sit in the electronic credit ledger. So there is a prescribed order or sequence to use that credit, which is given here. First, always IGST credit has to be utilized first against IGST liability. If still some credit is pending, it can be adjusted either against CGST or SGST liability in any order, in any proportion, left to the recipient to decide. Then coming to only when fully IGST credit is utilized, we will go and touch CGST credit. CGST credit will be first utilized against CGST liability. If still some amount is pending, it will be adjusted against IGST liability. CGST credit cannot be utilized against SGST liability or UTGST liability. Then coming to SGST or UTGST credit, first it will be adjusted against SGST or UTGST credit liability, and if still something is pending, it will be adjusted against IGST liability. For each registration, we have to claim the credit, and calculate output tax separately. So for a particular registration, either the supplier will have SGST or UTGST credit, not both for the single registration. Then coming to computation of GST liability. Whenever a person is registered under GST, on his GST profile on GST portal, he will be credited or he will be having three ledgers, that is electronic liability ledger, credit ledger and cash ledger. What do he record there is given in this guys. So electronic liability ledger has to be maintained in PMT 01, which is like this. Whatever a person is liable to pay under GST, that amount would be debited here. Whether it is output tax, interest, late fee, penalty, the entire amount will be debited in liability ledger. And this liability can be cleared in two ways. One is through using the input tax credit, which is available in credit ledger. So you can use that. If still some amount is payable, we have to pay it through cash ledger. Whatever credit is utilized, that is the balance which is standing in credit ledger. So electronic credit ledger is to be maintained in PMT02 format. Whenever a person has paid tax on his inward supply and after he has satisfied all the condition, that amount will be credited to his electronic credit ledger. And how he will use it is to pay the output tax. Electronic credit ledger balance can be utilized only to pay output tax, but not interest, late fee or penalty. So whatever amount we would have credited here means in the liability ledger, same amount will be debited in the credit ledger. Then if any excess credit is there which is not utilized, the person can claim the refund of the same. Whenever he is applying for the refund, immediately he will debit it to the credit ledger, assuming he will receive the refund. If it is granted, well and good. If not, if it is rejected, he has to credit it back. If it is rejected only. Okay. Then coming to the amount available in the electronic credit ledger may be utilized only to pay output tax. If the person is liable to pay any interest, late fee, penalty, it can always be paid only through electronic cash ledger, guys. Then coming to the cash ledger. Electronic cash ledger can be maintained in PMT 05. Whatever amount first the person is liable to pay GST, under GST, first he has to deposit into the cash ledger, very similar to bank account. Only then he can make the payment through this cash ledger. So first he has to deposit the amount into the cash ledger. There are various forms to deposit the amount into the cash ledger, that is e-payment, that is through internet banking, credit card or debit card, or RTGS or NEFT, or even over the counter. Up to maximum 10,000 per day, per challan per tax period can be deposited. Then once the amount is deposited, the same can be used to pay either the output tax or any liability under GST. So whatever amount is debited here, the same amount will be credited in the liability ledger. Then when a person has an excess unutilized credit, he would have applied for a refund. If refund is processed, immediately that will be credited to cash ledger only. So whenever I apply for it, immediately I will record it on the debit side of credit ledger and on the credit side of the cash ledger. If it is processed, well and good. But if it is rejected, immediately I have to recredit that amount into the electronic credit ledger and redebit into the electronic cash ledger. Chalo. Then the chronological order to discharge the liabilities or tax liabilities under GST is, first always you have to pay the tax and other dues with respect to previous tax periods. Only after you pay the dues with respect to last tax period, you can pay the tax and other dues with respect to the current period. And the last period is, even if the person is not liable to pay but not paid, in that case the department will come and recover the tax. That will be the last option, guys. So this is all about the revision of chapter 4.